Hello everyone, Jesse Webb, TradersPro. Market conditions mildly bullish in a bull market. Let's look at our top-down approach. We're still looking at long-term signals now. We're looking at this overall trend, still finding strength, still finding some momentum. As I've mentioned before, this is a slower moving indicator, but you can see the overall trend direction. Still continuing to move that overall direction, essentially shifting back from selling the rips, meaning selling into any rallies, and as they continue in that bear market. Now we're actually looking at buying the dips where we're in the overall uptrend and we're pulling back and watching for support moving higher. Instead of that, the anticipation of more downside, now you're seeing the market starting to buy anytime there's a pullback. That's a significant shift that we're starting to see, and we've continually seen it we've continued to see it even through this retracement or this little counter trend bull market that we've been seeing. It feels like a bear market rally, but it actually may be developing into something more. There's a couple other confirmation charts that I want to show you. We have not quite ticked up into the momentum into the buy. When that happens, that's going to move this overall indicator back to bullish in a bull market. We've seen that once now during this really the last 30 days, but we're seeing more and more of it, and we're seeing this consolidation right here. It's feeling like it's more of a bullish consolidation here with this uptrend and then counter trending and then anticipation for more upside. That's what these consolidation phases do, is they simply put a pause on a strong rally. The market kind of needs time to get caught up, retrace, pull back in, have a little bit of length of time, and then continue the overall uptrend. So we'll see if we get another up day or two to give us confirmation on that. We're getting closer on this buy-sell ratio now to a potential crossover. This is at least setting up like it's wanting to move that direction. We're just not quite there yet. So I think if we do get another up day, we'll get a crossover of the buy-sell ratio. That'll tick the overall direction alerts back up to bullish in a bull market. And the sentiment location, we talked about this as 50% line. If I draw a line right through here, we're getting some support and bounce. So we actually have some space between that overbought location and where we're at now, which is what we want to see to give the market some room to run on this. One of the things I also looked at today was if you go to the sectors tab and you go to the sector scan here, the next tab over, this sector ETFs, just sorting that by year to date, you can see the overall leading sector, at least based on this methodology, is technology based on the year-to-date performance. So it's up 25%. If you look at the chart on that, you're seeing that we're inside of this bullish location, nice trend profile, and it's moving this direction. And we're just about to break out. We've got this counter trend, another uptrend, retracement. So it's looking really bullish. This is a really bullish pattern because it's continuing to trend higher. Bounces are being bought into. You've got a new low, a higher low, and then an even higher low. And as that anticipates a breakout in technology, and if technology is leading the breakout, then you're getting more of a risk-on scenario, meaning riskier assets are coming back into the market's profile, the market's perspective. That's a good thing. That's a bullish thing. We want to see that. We want to see trades happening or into more speculative assets such as technology. So keep an eye on that today. Muscle Stocks Group, the new buy list, some good looking patterns here. Still medical and biomed, but that's just where the money is right now. So continue to focus on that overall trend. These stocks that are moving higher, and if you get a stock that's high ranked and giving you a pullback and giving you confirmation bar, that's ideal. Okay, that's what we want. And it's just not to say that is guaranteed that it's always going to work, but that's the edge. Okay, that's the focus that we're looking for, is what's leading, what's trending up, and then what's continuing to work. We want to focus on what's continuing to work. And yes, this stock in the last year is up 700%, but it's moving, and it may continue to have some overall upside. So that's the current That's the top of the list. It's top of the list because it's the highest rank in that group. If you look over here on the right-hand side, you've got this ranking. So the next one here, BIVI. This is a nice little stock that we've made some trades on through here. Retraced back in again. Looked like it wanted to move. This is one of another whipsaw pattern that we're starting to see is during the last year, a lot of times when we had these bearish signals, they would continue to slide. But now we're getting confirmation, some support, and now we're getting movement back up again. Keep an eye on this one. It's a quick moving stock, as all these biotech stocks are in this upper range of rank. Some additional stocks, medical drug, STVN, potential breakout, nice looking bar, nice looking confirmation bar, dead center into the buy zone. Everything's green, sitting right there. Placing a stop loss always to protect your risk, either at the low of the confirmation bar here, the low of the new buy bar, or the low of the most recent sell signal. That's the stop location. Once you know your stop location, then you can decide. That'll help you determine the number of shares that you actually need to be buying. One way to do that is if I wanted to add this stock into my portfolio, I would add it here. And I could say, okay, I'm going to focus on this portfolio. It's got $100,000 in it. And it's now going to say, all right, where's my stop loss? If I place my stop loss right here at this low, let's call it 2570. So I can go 2570. And now it's going to determine, I can go in and I can decide how many shares I buy. So if I bought 100 shares, that's only $2,800. If I get stopped out with my stop loss at 2570, then that's 9.5% at risk on the trade, but it's only 0.26% at risk on my portfolio at $270. So is that an acceptable level for you? If it is, then go for it. If it's not, then make a change. This is the only thing we can change and control. We can't control the direction of the stock. We can't control the movement that the stock does, but what we can control is we can decide how we enter and where, and then the size of position that we actually put on. So we can do 100 shares. Let's see what 1,000 shares looks like. Okay, 1,000 shares, we know that's going to be a little bit too much risk. That's a big trade. You know, we have the transaction on 100 shares is going to be $28,000, 9% at risk. That makes it a $2,700. That's too big. Okay, so now I need to come back and let's look what 500 shares looks like. $14,000 on a $100,000 portfolio. I don't like this to be higher than 10%. So of 100,000, this is still too high. This is now approaching an appropriate level, 1.32. So here, if I were to just notch this down a little bit, I'm playing with this number of shares. Again, that's my position size. When I refer to position size, that's what I'm talking about, is the number of shares that I'm actually buying. Now I'm at 11,000 on a $100,000 portfolio. Again, it doesn't have to be 100,000, whatever portfolio size you're using, but you still want to ideally focus on this number right here. What if I'm stopped out of this trade? That means that I'm gonna lose $1,000, which is a 1% drawdown or a 1% loss in my overall account. Is that acceptable? Okay, you've got to decide on a number right here that is acceptable. 1% is acceptable to me. I would stick with 400 shares in this case. This is a little bit high actually, so I may drop that down to 350. That's less than 10% now, and I'm under 1%. In these market conditions, I may not want to have as big of a position size. That's what I'm referring to when I'm saying trade smaller. Is maybe in this market environment, you start out with half of this. Maybe you start out with 150 shares, and then as you get additional confirmation, you can add in. Or maybe it rallies and then you get a pullback and then you add an additional 150 shares in as you're getting confirmation higher. So these are some real fast money management approaches that you can utilize with the portfolio and the calculator to determine what your risk looks like on any potential trade. Let's bump through a couple more stocks here. Breakout stock, we've looked at a lot of those recently. Bumps up to the extreme, give it a little bit of time to pull back. I'm actually just going to refresh here just to make sure we are square on the list. And TRN, we looked at that. INTT, nice looking confirmation move here as well. Lots of green on this profile. When I see all this green right here, that means you've got fundamentally sound companies as well. So annual EPS is growing, quarter earnings per the last quarter EPS is growing and sales is growing. Not fantastic. Ideally, you want to see these, up above 20%, but that's not bad. So in these environments as well, you want a company that is performing fundamentally, meaning the company is earning money, they're profitable. That's ultimately what's going to move the stock price. In the shorter term, you get a lot of speculative moves and as new money is coming in. But in this case, agricultural operations, we're seeing those stocks actually kind of come alive right here. Keep an eye on that one. This is a long consolidation pattern. If you look at this over the course of a year, you can see that it trended up, little pause, trended down, another tradable range right here, some volatility and whipsaw, and now some potential for some upside and breakout. So some good looking names in there, good looking market conditions at these levels. Keep an eye. We'll see what today brings. And if you don't have full access to the site and software, you can sign up with the link below. And we look forward to having you. Have a great day today.